Now I want to look at the policy response. Well, the policymakers in China, they were slow to respond, partly because they were misled by the inflation figures. I mentioned about the producer's price was still increasing, consumer prices were still rising. And to use a sporting analogy, those of you who sort of follow football or soccer would be familiar with what I'm going to say. Let's say I would say, if you think of policymakers as defenders, right? Those who try to prevent a goal from being scored, right? I would say that the Chinese policymakers, the defenders, were concentrating on the global financial crisis, that is the ball, and they forgot about the opposition striker, that is the domestic economy, who was lurking at the back post. And the reason why I say this is this, right? They concentrate on the financial crisis because it was big news. But at the same time, they were quite reassured that the impact on the crisis on them would be small, or at least not enough to trouble them. Why is that so? Well, because they were not unhappy to see a fall in the growth of exports. And the reason, of course, was because they actually wanted to restructure the economy from low value-added, low-skill manufacturing. So, if the export growth were to fall, to them it's actually good news, right? Because it means that they are able to move production away from this low-value, low-added products. But what they didn't anticipate, right, was the severe impact of the crisis on exports. Now, exports growth is not just fallen, it's now become negative. And even more importantly, what they did not anticipate was when I mentioned the fact that they were concentrating on the crisis, on the defenders, and then forgot about the opposition striker at the back post, was they neglected the domestic economy. They lost, they didn't watch out, did not keep a close eye on what's happening on the domestic economy. And they did not anticipate the massive loss in confidence, investor and consumer confidence at home. Now, China in 2008 is not the same as China in 1998. The economy is more decentralized, more globalized. You hear statements like, oh, but you still have all these state-owned enterprises. But the state-owned enterprises of today are not the same as the state-owned enterprises of 10 years ago. More and more, they are accountable for their profits and losses. If they perform well, senior managers in those SOEs will do well. If they perform badly, they will suffer accordingly. So, it's not a matter of a center giving directives, do this, do that. The SOEs do have a certain degree of autonomy. And plus the fact, of course, that we also know that the private sector have grown significantly over this 10 period. Right? So the consumers and investors much more conscious is what is happening abroad, and they have been, in fact, affected by the negative global sentiment. So this idea about the Chinese economy decoupling from the world economy is only true to a certain extent. It's only true to the extent that China does not depend on the foreign sector or the global economy as much as we think it is dependent. The degree of dependence is much lower than we think what it is. But, right, it doesn't mean it has no impact because China does export. But the important thing about decoupling is that China cannot be insulated from the negative consumer and investor sentiments, cannot be insulated from the negative news that is floating around the world, because the Chinese economy is much more decentralized than before. There are more and more independent consumers and investors. And that, I think, it's something that I think most commentators have sort of didn't pick on. It's not just whether the economy is decoupled or not decoupled from the world economy. It's not just the flows, commodity flows, financial flows. It's also ideas, sentiments, because that will affect domestic activity. Okay, now, so what has been the impact? Just mention a few things, right? We know that the Chinese GDP growth has, dropped significantly from 11% GDP growth in 2007. It's now fallen to 9% in 2008. And the official figures tell us that the fourth quarter growth rate, year to year, was 6.8%. This is fourth quarter of 2008. But if you calculate it on a quarter-to-quarter basis, actually the figures tell us that between the third quarter and the fourth quarter last year, there was no growth in China. So you could see there was quite a dramatic. And if you look at the price figures, deflation started last year in November, December, continued this year, January, February. Just before it came, I looked at the February figures. Prices keep falling. And unfortunate for Australia, the prices for mining products have fallen the most. The products that seem to be holding up was actually agriculture, primary products. But mining is the products that have fallen the most, the prices. Now, okay, we say that the export sector is important to China, but it's not as important, right? As a lot of people make up to be. I'll just give you some figures. We know that there's this figure of 20 million. The collapse in the in the export sector in southern China, and according to the Ministry of Human Resource and Social Security, 20 million migrants lost their jobs in the fourth quarter of 2008. It's a huge number, 20 million. Right? Now we put in the sort of perspective, because China is a mighty big country, right? It's about 15% of migrant labor, and it's about 9.7% of those employed in industry, and it's about 6.8% urban employment, because these workers would have been working in the urban areas, but it's actually only 2.6% of total employment. So it is a huge, in terms of numbers, and we can also say it's also, in some sense, significant in regional terms, because the loss in employment concentrated in certain part of China. But in the overall picture, it's bad, but it's not that bad. We have to. I think there's a tendency, for us to lose sight that China is a mighty big country. So some figures that appear to us as very scary, but when you look at them, in detail, well, it's bad, but it's not so scary after all. And I just want to share with you, right, that the crisis, okay, we know that the multinational corporations are downsizing in China, okay, but they are not downsizing in China to the same degree as elsewhere. And in fact, we know that, for example, that Pacific Brands, right, they are shutting down with 7 factories in Australia, a loss of 1,850 jobs. And guess where they're moving? To China, all right? They're moving to China. That's what they say. Intel closing down with semiconductor factories in Malaysia and Philippines. Where are they moving to? Chengdu in China. And there are a few others, right, that we know of. So what you find is that the crisis put pressures on multinational corporations and increased pressure on to seek lower cost of production centers. And China, it's still an attractive place. So I'll just want to finish off, I got a few more, but I'll just finish off here by basically saying that, look, crisis is affecting China severely, but it's more of a regional rather than total. It has political implications, right? Because we hear this banter around that it must have 8% growth rate, otherwise, there could be social unrest and so on. But my message is, it is not as bad as what people think it is. Right? I think that's my message. Thank you.
Up until the GFC hit, China was obviously a great benefit out of the way the economy was going. Presumably, well, as the figure suggests, their economy has slowed down significantly because of what's happened in the last 18 months or 2 years. Has that effect been irrevocable, or is China in a very healthy position to bounce back when the global economy bounces back?
Okay. My personal belief is that China, yes, depends on the global economy, but more importantly, it has to depend on itself. Because when you look at the figures, the contribution of net exports to China's growth rate for most years is only about 1%. It's only in 2005, 2006, and 2007 that actually went up to 2%. But we are thinking in the context of 11% or so growth rate. So if you were to ask me, okay, whether China will bounce back, I think China will bounce back, but do not expect double-digit growth figures. Because they themselves, or the policymakers, realize that those growth rates are unsustainable. So in fact, when we compare the impact of the crisis on China, we shouldn't be comparing, let's say, 11% with the 8% or 7% or 6%. We should actually be comparing, let's say, 10 or 9%, or even, because China, the policymakers did realize that those growth rates were unsustainable and have to be, much lower. So I would say, yeah, it will bounce back, but don't expect double-digit growth rates.
I think something that probably concerns a lot of us is what percentage of the total US bond offering is owned by the Chinese, and what are they likely to do with it? Interesting question.
Well, I think according to the figures, I think it's about, they hold more than Japan. I think it's about 30% or something of the US Treasury notes. Okay. Now, what are they going to do with it? My feeling is that they are not going to do something rash and sell, For the simple reason is this, right? Selling those bonds, right, or the Treasury notes, right? It's going to create problems for the U.S. It's going to most likely raise interest rates, going to stall their recovery, and it's not in China's interest. And if you look at what's happening, recent years, you have Hillary Clinton visiting China, making quite conciliatory noises, So I think the Chinese will not do something rash, and certainly will not want for the U.S. dollar, all right, okay, to depreciate, right? They do not want that, okay. Or in other words, they do not want the Chinese currency to appreciate, because the appreciation of the Chinese currency is actually putting a bit of pressure on the Chinese banking system, because Chinese banks do hold a fair bit of US dollar securities, and any appreciation of the currency any appreciation of the Chinese currency right, will lower the value of such securities, which means that you're going to put pressure on the capital asset ratios. So they won't like that.
I was wondering whether you could just give us your thoughts on the already announced China stimulus package and its implications.
Okay, the stimulus is huge, right? But as a lot of analysis have mentioned, it's pretty opaque. You know, people don't exactly know how much is this new spending and how much it's really promised before. I think there's a consensus that this package will add about 2% to GDP growth, right? And I just noticed that recently the configuration of the package has changed a bit. It's a little bit less emphasis, less money going into infrastructures. They're going to put more money into social security. And I think that's a good thing. And I think there's also a little bit more money, more higher share going into housing, and most probably into public housing. All right? And that's a good thing from a social stability point of view. And as I mentioned in the Lowy paper, one of the problems when you have this massive stimulus is, are they going to put it into good use? Right? And we know that there are governance issues in China. And you might have problems where you get more white elephants being built rather than the assets that will contribute to a good long-term quality growth. So I'm not, put it this way, my feeling is that as usual is always, some of it will be put into good use, right? Some of it will just be wasted.
When you asked at the beginning, put some of the data forth in the beginning, which suggested that American firms were exporting just a proportion of the low-wage, low-value-added to be produced in China. I wonder if there's some quite interesting data that's and arguments in the American side being suggested that, you know, part of that is a sort of tax policies in America to foster American companies exporting this proportion of low wage, low value added. But if that were to change, would that then be seen as in other words, that America then started actually, American firms actually had their own low wage, low value added within America? Would that be seen as protection if what you're saying on the other side with China was that there was a slightly long-term perception that China needed to get away from the low wage, low value added?
Well, I think it's this though. I mean, for a rich country, the United States, yeah, it's very hard to compete with a country like China. We tend to look at the eastern seaboard of China with high-rise buildings, but China is a huge country. Still, many parts of China very poor. So the scope actually in China for continuous low value-added, low manufacturing is actually quite high. But they have to move. The producers have to move westwards, right? But as I mentioned before, China, the leaders do have high aspirations to produce this high-tech stuff. Why? Like in America, right? The problem is this, right? Is that it's the same everywhere, right? In the sense that if you have third world skills, you would expect to earn third world wages, no matter where you are. You could be living in the first world, unless there is government intervention, subsidies and so on. I mean, there's, in a sense, there's a certain logic to it. I mean, why would people, or owners of capital pay a high wage to people doing simple things, if such things could be done in China or Bangladesh or whatever. So, in a way, it will certainly be regarded as protection, right? But my argument is that, look, if you really worry about jobs in the United States or in Australia, education is the way to go. You have to increase your skill so that you could increase the value added of the stuff you produce. And I think in the sense that in the United States, one of the big problems is that they actually spend more public money on building jails and operating the jails than giving money to education. So, that is basically a policy decision that they have to make. There's no point saying, look, we don't want these factories to move, but how are you going to compete?
Tony Dowling, do you have any problem with Chinalco buying shares in Rio? At the moment.
Well, put it this way, right? I haven't studied the issue closely, right? But I have to say this, right? That as long as the shareholders are happy, number one, and secondly, if the Australian government believes that it can tax the resource rent effectively, right? If the deal is to go through, then I see no problem with it, right? And that is, and I think this argument that, China doesn't allow, let's say, takeover of a certain company, therefore we should not allow Chinese to take over one of our companies. I believe that it's a spurious argument. It's a bit like cutting your nose to spite your face, because you have to examine each individual deal. You do what's best, for in terms of a national interest.
So we can see that Leong isn't an advisor to Senator Barnaby Joyce, who I think's from the same state as you. So there we go. Of course, last year the Lowy Institute poll showed that Australians in general, to a very large extent, did believe that foreign purchases of what they saw as Australian companies, and you can argue whether Rio is or not, was against their view of the national interest. Interesting result that you can find on our website.
But I have to say that it's not something that is limited to Australia. Even the Chinese, right? I mean, if a foreigner comes and take over a Chinese firm, no, taking over one of our icons. It's a sort of a common reaction, right? But in a lot of cases, there's no justification,
There has been discussion in the last week about changes by the Chinese authorities in relation to the US dollar and moving to a larger basket of other currencies. I wonder what your thoughts are on that and why this is being talked about in these particular times.
Well, actually this discussion has been going on for a while. And the main reason, of course, is that with all the weaknesses in the American economy, there's a belief that, we should hedge a bit more, right? In other words, most of the Chinese foreign exchange reserves are in US dollar. And the US dollar has been, depreciating against the Chinese yuan, for a while. It's sort of stabilized, but it's been, so it's not in the interest for China to hold a depreciating currency. So, another currency will be, you have to diversify a bit. And I think there's also a belief that the US is in a very privileged position because the US dollar is a reserve currency. And the US effectively could inflate itself out of its debt. It just print more money, right? Okay. Many other countries can't do it, right? But the US can, right? And I think China is also saying that, look, if you can't protect the value of your currency, right? Maybe we should rethink your role as a reserve currency.
We've now reached time when we have to let you go. I'd first like to thank Leong for both an engaging and a presentation that went well beyond his paper. His paper was at the core of his presentation, but he had added numerous layers of extra depth. So I'd like to thank him for doing that, and thank you for your patience.